In this episode, I'm going to explain what is a private lender, why do you need them, and how they might even be where you least expect them. All right, in this episode, I'm going to give you everything you need to start using private lenders in real estate today. Where to find them, why you need them, and how you will protect yourself as well as them, and I'm even going to give you the forms to do it. All right, it's like we're in school again. So what is the definition of a private lender? I want to give it to you right from orchardfunding.com. They say a private lender is a non-bank or company. It's an individual that lends money to people to buy real estate properties. Many private lending companies are also hard money lenders, which are designed for short-term expenses. That word hard money lender used to scare me, but I want you to know you don't need to be afraid of something like that. Generally, a hard money lender lends their own money, and it's called hard money because it's usually for points. You pay origination fees. It's the same exact words. So for instance, let me break it down for you. My first hard money loan was 4 points, 12% interest per annum. And that's interest only. Like, my payments aren't buying down the balance. So when I say 4 points, that's 4 origination points. So if I get a $100,000 loan, I'm paying that private money or that hard money lender 4% or $4,000 before I'm even actually stepping foot into the property at closing, when I'm actually taking title to the property. And then at 12% per annum. So for instance, I'm paying roughly 12% for that entire year. So 1% a month on $100,000, that's $12,000 a year. So a $100,000 loan, that's $12,000 a year, interest only. So that's $1,000 per month. And generally these are shorter term loans, anywhere from 6 to 9 months. So you need to look at it this way. You're gonna pay $4,000 up front, and then if you do 9 months of payments on this loan, so that's $9, $10, $11, $12, $13,000. Let me just double check my math. I'm not really great at math. $9, $10, $11, $12, $13,000 for using these private funds. But don't let that scare you. Maybe this is a deal that you're gonna make $30,000 on. Would you trade $13,000 for $30,000? Seems like a great investment to me. Almost 3x your return by utilizing someone else's funds. And let me go back to that point that I said, don't worry when you hear hard money lender, because they're in essence a partner with you on this project. Do you think they're gonna lend their funds out, their hard-earned personal money, for a property they're gonna let you overpay on, or they're going to overpay? Because the whole premise behind a hard money lender, if you don't pay, like, they'll take that property from you. So they want to make sure there's still meat on the bone for what they can make all their money back. So generally, private lender, they want to be under like 70 cents on the dollar, or sometimes 65 cents on the dollar. What does that mean? If the property's worth $100,000, the most they're going to lend is $70,000 total for that property. That's why I say they're like a partner with you in the business. Now, private loans, family, friends, generally it's less expensive. Generally, you're not paying points or origination fees. Half the time, private lenders don't even care about the origination fee or the points, because they're not like a hard money loan. They're not a traditional business that does loans for a living. For instance, my mother-in-law, she offered me $50,000. I didn't even realize it. I didn't even know she had these funds. $50,000 at 0% interest. Do you think she knows what points and origination fees are? She actually does, because she's in the business, but she wasn't trying to make those. She really was just helping me and her daughter out, my wife, to get started in the business. So I told you about, like, you might not even realize where they're at, or you might not even realize they're there. That was a private lender I didn't even realize existed, because I never even thought about my mother-in-law helping me out with my real estate business. She just saw what we were doing, wanted to get in on it. And yes, we did actually do a loan. I think it was like right at $30,000. It was about a year and a half ago. And we paid her a small fee for helping us out, because we wanted that money to be available the next time that we needed it. So in essence, my mother-in-law is also my private lender. All right, so let's talk about some other places that you can find private lending. I love meetups. I love real estate meetups. So a lot of times there'll be like a luncheon or a coffee. You can find these real estate meetups on meetup.com, or by going to Bigger Pockets and just asking a question in the forum. Bigger Pockets has a free version. You don't have to pay for their subscription. You can actually go on as a free version, a free account, and ask like, hey, where's the real estate meetup in my area? And you can find people out there doing business or people that want to do business. Or in this case, was a guy that had just inherited a bunch of funds. He had been wanting to get into real estate for a long time, but he had a very, very demanding job. His name is Daryl. I still am friends with Daryl today. Back in 2016, I met him, and he actually lent me $50,000 for a project that I was doing. I had already owned the house, and Daryl came in as a second lender on the second position and lent me the $50,000 that I needed for the renovation funds. And here's what's so cool about Daryl. I met him at a meetup. I was speaking there, and we hit it off. And what's so cool is he actually lived right down the road from this project that I was doing, closer than I lived. And guess who was helping me project manage? He would go by and give me updates. Hey, plumber came by today. Hey, the furnace got serviced today. Hey, the tile was installed today. And he was keeping a close eye on this. And he really loved this project too. Like, he would bring his children by. He brought his wife by and said, look what our money is doing. Like, he got to show the renovations. It's as if he was on HGTV doing this project with me. And it was so cool. Like, I looked at this guy, Daryl, my private lender, as a partner in this deal. And you know, his money made him money. Like, I think he charged me like 8 or 10% interest. There was no points paid, no origination fees. So his $50,000 got him a return on investment of 8 to 10% that he would not have had. And we've done other deals since, and we're actually now partners together on a 19-unit apartment complex. So these private lenders end up doing more and more business with you. All right, let's talk about friends now. You know, birds of a feather flock together. So my friends at this time, when I was just starting my real estate business, I was kind of transitioning out of the military. I was an Army officer. Guess what? I was friends with other Army officers that were also thinking about real estate or also thinking about transitioning out of the military and into the real estate business, but had no clue about real estate. And I was just a little bit further ahead than they were. They wanted to collapse time frames, stand on the shoulders of giants, as like Tony Robbins would say, and they saw me as the expert because they saw I was out doing this already. So I was just a little bit ahead of them. You know, there's a great saying called, in the land of the blind, the one-eyed is king. So technically, I was the king because I only had one eye because I just knew a little bit more about this than they did. Well, guess what? They had funds. They wanted to invest on my deals. So we did deals together where they became my private lender. I'd make a quick $10,000 or $20,000 on a land deal. They would loan me the money to do this deal, and they'd make a quick $1,000 or $2,000 on their money as well, as if they were my own built-in private lender. They were also my friend, and they saw what I was doing, and they wanted to get on board. When people see things like a winning streak, they want to get on board. That's why when the real estate market's hot, everyone jumps in. When someone's having a great success on the slot machines, everyone wants to put their money into that slot machines. It's human nature. We all want to get in on a winning horse. Let me give you a word of advice for doing business with friends and family. Always be prepared that no matter how bad you do an investment, if something goes wrong, you will absolutely have to pay these funds back. Absolutely promise to pay these funds back and give them that return that you promised or signed. I recommend having things in writing, like terms, like, hey, when are you gonna have these funds paid back? Like, what's the interest rate? Like, how much of an interest rate are you going to give? And you don't have to get crazy with this. Most people are fine making anywhere from 6 to 9% interest on their money, because think about the alternative. They probably got their money in a savings account that's earning them absolutely nothing right now. So if you give them a 6% return on their money, I guarantee you that's triple what their bank's paying. And you know, looking at the stock market, that's volatile. You know, that's scary. They can never get that money back. With you, it's actually invested in an asset like a piece of land or a house or an apartment complex. That money is there. It hasn't vanished in the stock market. So you've got an actual more secure return. You know, you're someone they know. They're going to get the money back, and they're doing very, very well. So you don't have to give them an astronomical amount of money, but you want to have these things in writing. You want to, you know, have everyone understand what's going on. Like, you're going to use this money for 1 year. You're going to pay back 6% interest. You're not going to make any payments until you sell it. Or you are going to make payments of, I don't know, $100 or $300 or $500 a month until you sell it. But absolutely stick to these terms and be full full prepared to pay back even if things go south, because you never want to lose that relationship. Just because you don't make money doesn't mean that they shouldn't get their money back. So be absolutely prepared. You've got a lot of responsibility on your shoulders. You need to protect them. You need to do what you say you're going to do and when you're going to do it. And if not, if something changes, you need to fully communicate that very well in advance and be open and explain what's going on and have a second option. I'm going to give you a couple ways I protect myself as well as my private lenders. One, I'm not buying an asset. I'm not buying the property, the land, or the house unless I'm paying less than 65 cents on the dollar. So what does that mean? If I'm buying a $100,000 piece of land and I'm going to use a lender, I'm not going to borrow more than $65,000 on this $100,000 piece of land, because if things go south, if the market changes, I want to be able to sell this land and pay my private lender back and also make profit. At the end of the day, I'm not just doing it to pay them. I want to make profit too. So that means I've got to build in my margin of safety. Warren Buffett says it best, the 3 best words in investing are margin of safety. He's buying his assets, he's buying his investments like we buy groceries on sale, not like we're buying perfume. We don't want to pay too high of a price. We want the discounted price. That's where the margin of safety comes in. All right, so before I get to the documents that I use to protect me and my private lenders, go ahead and comment below any questions or maybe any other ideas to find private lenders that you might have used. And also like this video and subscribe. Comment, like, subscribe. I come out with these videos 5 days a week. No one else out there is talking about what they're doing with land and private lenders. So I want you to see when other videos come out. So let's get to the documents. All right, the first document is a deed of trust. This is basically putting your private lender on the deed of trust. This document, states that if you don't pay the money back or something happens and you get hit by a bus or anything weird happens, this deed of trust keeps them in a position, a security position. Generally, I'd like to keep my lenders the first position. If something happens, they don't have to talk to any other lenders. They can take the property, and now they have an asset that they've literally lent $65,000 on, and it's worth $100,000. So they're going to be in a good position. That's the deed of trust. And I'm going to give a snapshot, like a snippet of this. Hopefully you can see it on the video. But I just want to explain, like the deed of trust, like you actually put the day it's created. Between who? Olga. This is a person that I actually lent on a piece of land. This deal was a pretty cool deal. It was a piece of land that I purchased for $7,000, and Olga was buying it from me for $37,000. So Olga brought $7,000 as her down payment to closing, and then I held a deed of trust for her for about $30,000, where I was now the lender. I never actually took ownership of this land. I was just a bank for this land. So that's another option, another way you can be a private lender on a piece of land. I don't just have to go lend money. I can create these private lending notes. So that's another higher level strategy, and I can talk to you more about that in other videos. Another is an actual promissory note. Another parcel of land that I had purchased. This was from Robert Simpson. He's now passed away. He's no longer with us, but he held a note for me for $22,000, and I paid him $1,000 a month starting on April 27th of 2020. And you can probably see the screenshot of this promissory note, but I had this loan at 0% interest. This is where the seller actually became my lender, my private lender for a property that he sold me. So there's so many ways to have private lenders. In this case, we call that a seller carryback. So these are just examples of not just private lending, but also the forms that are used. So that protected Robert Simpson. If I stopped paying for the land, he could take it back. And I only owed $22,000 on this piece of land according to this promissory note. This land is worth over $160,000. Do you think Robert Simpson was in a pretty good position to take this land back if I stopped paying my lender? Yes, he definitely was. This is how he's protected, and also I'm protected as well. No one can come and just take the land if I'm paying for it. So I want to read a quote really quick by a famous guy named Lonnie Scruggs. Like, this guy taught people how to buy mobile homes and create notes on them. But Lonnie Scruggs says, just create a note to obligate someone to go to work and make paychecks so they can send money to you every single month. Well, I created a tried and true method where I teach people how to create notes, how to buy land at maximum discounts and turn around and sell this stuff for premium and retail prices that pays you monthly, every single month. And I've got over 100 notes now. I've done over 271 land deals. And this tried and true method, I'm teaching others how to do it. So if you're interested in checking this out, you want me to personally coach you, head over to thelandsharks.com. The link is below in the description. Looking forward to seeing you on the call.